and then we'll get going.
I want to let everyone know that I've started the YouTube live recording. Thank you.
All right. Well, it is 9:01. I see people joining. We like to be punctual on this committee, and I want to respect the time of those from the agency and the consultant. So my name is Sean Scanlon. I am the House co-chair of the Finance, Revenue, and Bonding Committee, and I will call to order a hearing this morning on the 2022 Tax Incidence Report, where we are joined today by Commissioner Mark Boughton and his team from the Department of Revenue Services, and they will do a presentation in a moment. Any remarks from my co-chair, Senator Fonfara?
Good morning, Mr. Chairman. I do not have any remarks at this time.
Representative Cheeseman, Senator Martin, any remarks from the ranking members?
No, just looking forward to hearing from the Commissioner and his team this morning.
Thank you, Mr. Chair. I have none. Thank you.
Okay. Well, just briefly before I turn this over to Commissioner Boughton, I would say that I am very excited to be here because I think this is a very, very important report, and it's a very, very important report that I hope members have some serious questions about. I and Senator Fonfara fought very hard to make sure this report actually happened, and it had been since 2014 that we had last seen one of these reports. And I personally believe it's very, very important for us to get regular updates as to what's exactly happening when it comes to tax incidents. And so today, I think, is one of the more important conversations we will have as a committee this session. And the data within this is one of the most important things I think we can look at as a committee and figure out what the best way to solve the problem that I believe is indicated here in this report. So without further ado, Commissioner, the floor is yours. After your presentation, we will begin question and answer. As always with this committee, we will limit member interactions to 5 minutes total between the witnesses and the members for the first round. And if people have a second question, they can sort of get in the queue after the first round is over. But we do want to be conscious of the time of the commissioner, and we are hoping to end the hearing around 11 o'clock. So, Commissioner, the floor is yours, and let's begin the conversation. Commissioner, you are on mute.
That is the, I think that's the statement that we hear all the time, right? I mean, that is like, if we go back and look at this era 20 years from now, it's going to be you're on mute. But anyways, thank you, Mr. Commissioner. Mr. Chairman, I think you summarized a lot of the challenges and the interests with this. And so I want to appreciate your support. Chairman Fonfara, I appreciate your support, as well as ranking members Martin and Cheeseman, as we pull this report together. I'm excited to be here as we've taken really the first step in a new journey in DRS operations. For the first time in 8 years, we are issuing a new tax incident study. Going forward, we are planning to use the resources that this body has provided our agency to create a new unit. That new unit will enable us to deliver reports on a consistent biannual basis. So I just want to emphasize that this report and a one-off is not helpful. It will only be helpful if in December of 2023, we continue to do another report and then another report, so that you as a legislative body can look at what policy decisions have been made and where they are taking us as it relates to taxes. So with that said, let's dig in. Ami? You'll see our table of contents has our objective, what we did, future iterations, our findings, or methodologies. Today, I have topic areas that I want to cover. I think they're important. And as I mentioned, it'll be important for the future of DRS as we commit to regular analysis of this type. Let's go to the next slide. So what is a tax incident study, and why do we conduct them? In short, tax incidence looks at how tax burden moves within our economy. Some taxes, such as personal income tax, are unable to move. It means that you can't pass them around. But where businesses can move taxes to consumers, which then changes who bears the burden in the long run. The simplest example of this is when you are charged a sales tax at a store. The business may owe the money to the state, but we, the consumers, are shouldering the burden. With that said, there are a few things to keep in mind when viewing this report. The first is that the statute that authorized DRS to conduct this study does not cover every tax that exists. It covers only 5 topics: the income tax, the corporation business tax, sales and use tax, excise taxes, and finally, property tax. Second, and more importantly, this study is a snapshot in time. It's really one data point. We had multiple economists review the study, and one thing they all agreed on is that in order to draw real conclusions, the key is to produce a regular set of reports so that trends can be viewed over a period of time. Next slide, please. When DRS began this report, we felt it was important that this information was not only compiled, but also accessible. Not everyone has the training to digest a 50-page economic report, and frankly speaking, not everyone has the time. To that end, we put together a short video on what the report is and what we found in conducting this study. So Ami, if you could run the video.
Hello, my name is Mark Bowden, and I have the privilege of serving as the Commissioner of the Connecticut Department of Revenue Services. You know, it's been said that taxes are the price we all pay to live in a civilized society. And I think there's real truth in that statement. To be clear, taxes are never fun to pay, but they are important. They fund much of what makes the modern world possible. So today I'm excited to announce that we are releasing a tax incidence study. We took 30 different sets of data containing over 2 million households and nearly 40,000 businesses, comprising over 100 million individual data points to determine how taxes affect everyone in our state. So here's what we learned. Our tax policy is balanced and thoughtful, but there's always more work to do. Overall, our taxes have evolved throughout the years. This has been a result of policy changes and a unified effort ranging from municipalities to state government. We see this in current distribution of taxes in the report. From a business perspective, the transition to a combined unitary system, which allows companies to file under one parent entity, has reduced the Connecticut tax burden. When it comes to income tax, we've made efforts toward creating a more progressive system that is tiered to ensure people at all income levels are paying their fair share. The income tax provides significant funding to the state of Connecticut. What this report found is increasing the number of income brackets within our tax code has contributed to the distribution of the income tax toward higher income earners. Here in Connecticut, we've made great strides toward infusing sales and excise taxes with progressive characteristics. We've used variable rates for different items because there is no one-size-fits-all when it comes to sales and excise taxes. Additionally, we have worked with the legislature over the years to exempt essential items such as groceries, children's car seats, over-the-counter medicines, college textbooks, and devices that are able to assist people who may have a disability. We looked at the corporation business tax too, and here we made positive changes in recent years. We moved our entire tax structure toward a model that is similar to market-based outsourcing. What that means is we were able to capture more revenue from businesses who may not locate in Connecticut but make money here. When we talk about fair share, it's important that we're able to have those who earn income from our residents participate in all facets of our economy, including taxation. Finally, we examined property taxes. We know that for most people, their home represents the biggest investment of their lives. It also is a place where they pay most of their taxes. It's important to note that these are local tax dollars that help to pay for schools and first responders. Because of this, Governor Lamont has reinstated the property tax credit for qualifying individuals and is seeking to expand it. He has also proposed lowering car tax payments to a mill rate cap per vehicle. It's our hope that these changes begin to help ease some of this particular incidence on our residents and families. I am so proud of the work we do and how our efforts and our partnership with the governor and the legislature enables us to serve the taxpayers of Connecticut. Thank you.
Thank you, Ami. Appreciate that. If we can move to the next slide. So those are the highlights. But I think it's important to briefly discuss how we arrived at this moment. As mentioned, our commitment on an ongoing forward basis is to conduct this study every 2 years. The reason we are committing to that is born out of the timeline that you see on the screen. As noted, the legislature initially asked for a TI study in 2013. Our predecessor had a document produced at the end of the following year. However, due to a number of factors, DRS had not conducted another study for 8 years. This has had a few impacts. The first of which has been many of the staff that assisted in the compilation of the 2014 report have since retired from state service. This meant that we had to start from scratch and generate a new methodology, which I will describe a little bit. Additionally, this is something we have not built into our staffing model at DRS up until now, so we had to contract with an outside vendor in order to complete the study. Now that the legislature has provided us the tools to bring this in-house, allowing for iterations and refinements can be made over future years that make the study more comprehensive and illuminating than just a snapshot in time. And I got to tell you, I'm very excited about that because I think it's going to give you real tools to be able to make your policy decision. Next slide, please. Our objective. That is to look at where we've been and where we are going. But let's talk about where we are. When we began this project, we had 3 goals. Do an incident study, document how the study was conducted so that we can begin the process of standardizing our methods, and finally, make recommendations on how we feel this report can be improved over time. We map these goals to the authorizing legislation you see before you. One thing we felt strongly on at the outset is that we in the department not get into the business of interpreting legislative intent. Therefore, the study that we have created follows the statute very strictly. We did not add taxes that are not enumerated. The reason for this is simple. If and when this body decides to amend any statute, we'd like to be part of that conversation between the legislature and our department. However, we did not feel that we should do that unilaterally. Therefore, we had a very strict sphere of activity for the creation of the study. We only looked at the taxes that are highlighted above. If it is not there, we have not looked at it. We did take some license, however, when it came to taxpayer characteristics, because as you can see, the statute afforded us some leeway in that area. One example of this is that we felt, after some benchmarking of other studies, that we limit our view of incidents to those tax filers who reside within the state and did not examine those non-resident taxpayers. If there are other areas that this committee wishes for us to examine as we begin the RAF unit as we bring the RAF unit online, give us a ring and we'd be happy to work with you and add those pieces in. Move to the next slide. With that framework in mind, let's take a look at what we did in the study. Next slide. While our scope was limited to Connecticut General Statute 12-7C, this was no small lift. Overall, our team analyzed over 100 million points of data to compile the study. Over the last 3 months, we have sifted through these layers of data, generated distribution models, and iterated the results. Additionally, we examined other studies to see how other states conduct analysis and leverage best practices. Finally, we sought out external economic feedback and either incorporated it or plan to incorporate it into future versions. I would be remiss if I did not take a moment to thank the number of DRS and State of Connecticut staff that helped to create this study, a task that was over and above their everyday jobs. Thank you to those employees. We could not have completed this without you, specifically John Biello, Amy Plord, Lou Bakari, Riel Levine, Andrew Black, and Phil Susi. Additionally, I'd like to thank our partners, Accenture, Don Klepper-Smith at DataCorp, Fred Carstensen, and his team at the Connecticut Center for Economic Analysis, as well as the staff at DECD and OPM, particularly Scott Gall, our Chief Data Officer. Scott was incredibly helpful, and we are so thankful to him. Next slide. Before we move into what our study found, I want to speak briefly on on where we see this document moving in the future. Go to the next slide. Our future state. It's been said that every company is now a tech company. And while I think that is true, I think when it comes to public service, every agency is a data company. What I mean by this is an agency DRS has to store data. This is an untapped resource that we should be harnessing to better inform our agency and U.S. policymakers, and frankly, to better service the residents of Connecticut. It is with this sentiment in mind that DRS has decided to create the RAF unit. The tax incident study is just the beginning. We want to have an arm within our organization that can synthesize our data and work to extrapolate trend data as well as to forecast. To be clear, we have many talented people within our organization who are capable of pieces of this. They can do parts of this, but we want to bring all those capabilities together and enhance them with an economic policy lens, and that's what we plan to do. As I mentioned to you earlier, one of the tasks the new group will have is the creation of the next TI study, which is due on December 31st, 2023. It is our hope that we'll be able to create more publications, analysis that our agency and state government in total will be able to utilize. Seen here, our vision is to uplift this unit, create an operational model for it that will fit within our agency, and then begin to bring standardization and documentation to the great work that already is being done at DRS. Next slide, please. All right, I know you want to know what's in the report, so here we go. Here's our takeaways. As I mentioned previously, our authorizing legislation requires our findings to be broken down into 10 equal parts that we call income deciles. We then apply the apportioned amount incidence that is borne to each decile accordingly. Stepping back from any one decile, however, and looking at incidence in aggregate for a moment, what we found is that, unsurprisingly, property and income tax make up the largest share of incidence across all deciles. And, when you think about it, it probably makes sense. Those individual tax filers that are working pay income tax on those earnings, and as mentioned in the video, people's homes typically represent their largest investment and hold significant value that municipalities tax in order to generate operating revenue. After this, the sales tax is the third largest share of incidence, followed by excise tax, and then finally the corporation business tax. It is interesting to note that the corporation business tax has been reduced due to a change in how we measure corporate earnings. I will describe this a little bit more later in the presentation. When it comes to the personal income tax, we find this is the most progressive form of taxation that we analyzed. A key finding here is that there is only a 1.1% difference in the taxes paid as a percentage of income tax between deciles 2 and 9. This is significant finding because it means that this tax is approaching proportionality or fairness in terms of incidence. Simply put, the burden is shared more equally. I would caution you about decile 1. Decile 1, because of the nature of the data we have, we're not able to segregate those individuals that made money, but were able to, and their adjusted gross income, report no earnings. So while there are people who are not, who are struggling in our economy, there are also people that are both in there that maybe didn't have to pay taxes for a variety of different reasons. Finally, with the implementation of the varied sales and use tax rates, we've been able to decrease the regressivity of Connecticut sales tax when compared to the prior study. As mentioned, as we move forward, proportionality with different tax types has a positive effect on how our taxes are distributed across the income deciles. So let's take a look at what the corporation business tax did. Next slide, please. Here's some of the takeaways for the corporation business tax. One of the takeaways that this report confirmed is that our department's work to move from a 3-factor apportionment regime to a single sales factor apportionment. Prior to this change, many businesses computed their tax base on 3 factors that included property, payroll, and sales. Connecticut sales are also determined using a market-based approach rather than a cost of performance approach. The changes to a single sales apportionment and market-based approach aligns the business's tax obligations with the market in which said corporation operates. So what does this mean? It means that by working with you, we change the way corporations are taxed in Connecticut, and we're able to shift the tax incidence away from companies located in Connecticut to those corporations that are located out of Connecticut. To that end, I want to thank this legislative body and commend you for your work in passing the many acts and statutes that allow this to happen. I also want to thank the team at DRS who worked tirelessly to implement these changes. In addition, DRS moved from a separate filing regime to a combined unitary system. As of January 1, 2016, as seen with the creation of CT 1120CU form, this change has also contributed to the exportation of taxes, allowing companies to file under one parent company as opposed to filing multiple separate returns. These changes created a fairer tax burden for our Connecticut companies and allowed for tax incidents that may have been borne by a resident to be borne elsewhere and resulted in lowering overall incidents for the taxpayers of the state of Connecticut. It's also important to note that most of the corporation business tax is collected from the largest corporations, those with gross receipts larger than $1 billion per year. Lastly, we also noted in this report and wanted to commend this body for its work to reduce barriers to entry for local breweries and wineries. Beer and wine is important, folks, and you've done a lot of good work on this area. By reducing the overall burden for this industry when it comes to excise tax, ultimately lower the overall tax incidence felt by the residents of this state. Next slide, please. Often when these types of reports are issued, much of the focus goes on to where the burden lands as a percentage of income. To be clear, that is the primary reason for conducting a tax incidence study. However, what can be lost is the dollar amount paid by those on the other end of the spectrum. What our study shows is that while lower income earners pay a higher percentage of their salary, higher income earners pay much higher amounts of taxes. By way of example, Decile 1 has nearly 900,000 people that make up a combined AGI of $17 billion, while Decile 10 has 772 people with a combined AGI of the same amount. I point this out because while the study measures incidence, it's important not to ignore the amount of tax paid in raw dollars as they provide a significant contribution to the operations and services that the state is able to provide. Additionally, we would like to highlight that among the taxes that the state of Connecticut and DRS collect, you can see on the left graphic, they're approaching proportionality. So the left is just state taxes only. However, when we layer the incidence from the property tax on the right, the picture changes dramatically. So before people make sweeping conclusions or inferences from this picture, I would pause here and say that we want to explore data in this area much more deeply. Currently, it's hard to get a granular picture of property tax because of the data available, which is aggregated solely at the municipal level and not at the property address, household or owner level. Because of this fact, this current picture has a strong correlation with population, which can skew the results and appear more regressive. As I mentioned, Decile 1 has a population that approaches 900,000 filers. Now, as a former mayor, I have to tell you, I am sensitive to the property tax and I understand how difficult it is. So I'm certainly not here suggesting that this is the fault of any of our local municipalities who work every day to deliver important services. But when you layer on that property tax on top of the overall tax burden for our residents, you can see that the property tax is a tax that grinds on and on and on. It doesn't care about pandemics. It doesn't care about challenges in the international arena. You have to pay your property tax bill. And we'll talk a little bit more about that in the future. As you'll see in this report, it recommends that to the legislature empowers OPM to work with towns to standardize classifications for data collection points, like land use and ownership. OPM should also consider standardizing organization by census tract or zip code. In addition to town, and in order to enable more detailed analysis of how a location affects the property tax incidence on residents and part-year residents. Additionally, DRS respectfully suggests that the legislature should work with OPM to allow for this data to be collected directly from towns to OPM. With that said, once again, I just want to thank and praise Scott Gall, Connecticut's Chief Data Officer. He and his team are commencing the work I just mentioned now. So they're already trying to put together this work, which is great. And they've been doing a fantastic job. And to the extent that OPM may require additional resources to improve data collection, the legislature may want to inquire as to what specific enhancements and resources are needed to help with further granularity to the existing data. Next slide, please. I mentioned the property tax earlier, and this slide, I put in the slide a couple of days ago because as a mayor, former mayor, I was very keen to this challenge to residents. So if you look at James at the top picture, he's retired. He has adjusted gross income of $75,000. James has to pay $6,000 a year in property taxes. If you look at Vanessa below James, she makes $150,000. She lives in the same condo complex next door to him. She's a software developer, and she has to pay $6,000. So the impact on Vanessa's budget is a lot less than what it is on James's budget. $6,000 on James's money, on his income, is a big hit. For Vanessa, it's a hit, but something that she certainly can manage given her adjusted gross income. So that leads to a disparity, and we see around the tax because it's not proportional. And it really helps explain the graph that you see above and the impact it has on our residents. Okay. Now that we have covered what we found, I'd like to talk briefly about our approach or how we arrived at our conclusions. Go to the next slide. As I mentioned at the start of this, we only examine the taxes that were listed in the statute. I want to reiterate that fact, not only because it bears repeating, but also because the taxes examined have existed for a very long time. They're not new, and they should be expected by our residents and businesses. This is important when it comes to incidents because our model calculates that for these specific taxes, 100% of the burden of the tax that is levied onto Connecticut businesses is passed on to consumers, and ultimately the incidence is borne by our residents. So every economist that I talked to said that initially there may be some shifting or not, depending on how the business tax or whatever tax is levied on businesses applies. But after a few years, all businesses figure it out and they pass it along to our residents. And the reason for this at the point in our society is we feel it's fair to assume that the sales tax, property tax, and the corporation business tax are known entities, and businesses have already shifted them over to our residents. But even if you used a 50% shift of the corporate property and the corporation business tax, it provides a different lens with which to view the incidence. What we found is that the difference of incidence that is placed on a residence between these two views is negligible. It's roughly 4%. It's our hope that the new RAF unit will be able to improve state data collection and begin to sharpen our view of incidence so that we can begin to know just how these burdens are placed and on whom they're placed on in a very robust and granular way. What's clear about this is that there is an art to these reports. There's no question about it. And the final point I'd like to highlight on this slide is that the report uses data from 2019. So it does not analyze how COVID-19 and the pandemic has affected tax incidence in the state of Connecticut. Remember, the 2014 study used data from 2011. So really, it's an 8-year spread. As we continue to conduct these studies, we'll begin to see how external forces interplay with our tax policy. So stay tuned because we'll have more for you. I personally am very interested to see what this incident study looks like in 2023 once we factor in the pandemic. So I want to thank everyone for listening to this. I know it was a half an hour, but it is a complicated process. I have experts here on the line that will be happy to answer any questions you have if I can't answer them. And again, this is a work in progress. This is a start, and we are already thinking about how to set up or how to execute the next tax incident study. So thank you, Mr. Chairman.
Thank you, Mr. Commissioner. Appreciate that, and I know we're going to have a lot of questions. So let me start here, and I'm going to try to go as quickly as I can. And I hope you would keep your answers as brief as you can, so we can get through as much for each member. There was a lot of frustration amongst fellow nerds like myself who like to dive into this data, who felt like it was very difficult to compare apples to apples, even though we just have one report. There were 4 actually taxes that were not included in this report. And I'm wondering if you just talk a little bit about why that was not in the case of this report.
So a couple of things it becomes difficult to compare data that's 8 years old. The tax scheme in Connecticut was much different back then than it is even now as we've evolved and made changes. There's been more progressivity, not as much as a lot of people would like, but there has been some progressivity added to our structure. The statute does not call for those additional 4 taxes. We're trying to create a common template. If you want to add in those taxes, then my respectful, very respectful suggestion is that we amend the statute to do that. Or you give enough leeway in the statute because it really doesn't say you can add whatever taxes you want. I mean, at that point, you might want to think about all the fees that are assessed to people in certain occupations. There's a lot more than just taxes that people pay. So I think the legislature, and I can't divine their intent back when they passed this, was that let's stick with these 4. They're expected, they've been shifted over. Everybody knows that they're going to have to pay those. But I would encourage you, if you want to add more, again, 18 months, we'll be doing this again, and we can do that. What's great about this study is that it provides a template, and now we just have to plug in numbers, update the data, add new taxes in if that's what the legislature wants. But I would not try to compare this to the 2014 study. They are different studies, but you can divine things and information that any policymaker would like in terms of what's there. And certainly we can dig up stuff for you if you need it.
So one of the things that I've divined, to your point about the difference, is that even with some of those taxes missing, 3 of which I think I would consider to be regressive taxes, the trend line seems to be the same 8 years later, which is that low and middle income earners are disproportionately paying a higher tax incidence than those at the top. Would you say that that is a fair conclusion to draw 8 years later from this report, as I drew from the first one?
I think it's fair. I mentioned to be cautious of decile 1, but even if you look at decile 2, you can say it's very similar to the 2014 study in that sense. I would say too, when we look at James and our samples from those 2 individuals that lived in the house, an impact of $2 million in taxes for somebody who makes $100 million a year is not the same of $2,000 in taxes for somebody that makes $25,000 a year. That's a bigger impact for the person who makes a lower amount of money. As a policymaker, and I understand I'm not making policy here, but I always look at what's the impact? What's the impact of the tax? Who pays and why? And that's what I've always been concerned of. And I think, I think that's absolutely a fair assessment of what's happening here. I do think when you peel off the property tax, we've made some progress. We're not done, but we've definitely made some progress over the years.
Yeah, and I would agree with that. But the problem is, the big thing we have not made progress on is the biggest thing your report shows is killing the people of Connecticut, which is the property tax. And the fact that it is a very, very disparate tax burden. And those 2 examples, those 2 individuals that you showed, is the case in point in which is the story of Connecticut, as far as I'm concerned right now, in terms of taxation and the truly unfair burden we're placing on those who are on the low income spectrum and certainly in the middle class. And I know, the administration has put forward some proposals this year on cutting the property tax and the car tax. This committee will be having hearings on our own set of proposals in the next week or 2 to try to get at that. But in some senses, boosting property tax credits and trying to lower the car tax mill rate is, in my opinion, trying to plug a gaping hole with some gum. Have you given any sense in your department as to making a recommendation to the legislature or this committee as to how we can address this issue, meaning the property tax issue?
I did work closely with the governor's team on his proposals. One of the challenges that we have, and I would certainly defer to OPM on this, but one of the challenges we have is the minimis rule about how much credit we can give. We can spend more, but we can't necessarily cut taxes, and it really hamstrung us in being able to come up with a plan that works. Having said all that, I did propose, I think in our legislative ask, was to start a conversation that would last throughout the year of really looking at these issues, particularly the impact of the property tax, as well as all of the other taxes that are enumerated in the incident study. There's an opportunity here for us to begin a discussion about recalibrating how we collect taxes in Connecticut. That would be more fair, would be more responsive. I just want to be clear, as I mentioned earlier, as a former mayor, I'm not picking on our local elected officials. That's one of the only ways they have to generate revenue to pay their teachers, police officers, and firefighters. So we all understand that. And we did make some stabs at, increasing pilot money and things like that. I'm not sure that got to what we need to do because you and I are concerned about what's the impact on the resident, right? And the actual person walking around out there. So I'd love to have a further conversation. Do we have other recommendations? We have several. I will get them over to you of ways that we can do this. But we are hamstrung with the federal rules as it relates to ARPA funding. So with that, though, I'm happy to sit down with you offline and talk about it.
Yeah. Well, I hope you will, Commissioner, give me the list of questions that you feel like you need uniformity on with regard to the property tax so that we can begin to get a better uniform collection of that. And I hope that we will endeavor to fix the property tax system, not just do fixes to it. And to me, that means getting rid of it and starting over and doing something new, which I know sounds a little radical, but I think we're in the need of something big and bold when it comes to this, because the system that's been in place since the 1700s is not working for us, in my estimation, anymore. Last question before I turn it over with the balance of my time is, did DRS do any sort of calculations as to whether the tax incidence was reversed on the highest earners, what kind of revenue that would bring in? Meaning if the tax burden was higher on those on the top than it is on those on the bottom, how much more revenue we'd be bringing in, or if there was parity among those rates. Did you calculate that?
No, that was not part of our study.
Okay. Well, in the future, I would assess that might be one of the things we would ask you to look at. So, all right, Commissioner, thank you so much for your time. We'll go next to the ranking member, Representative Cheeseman.
Thank you very much, Chairman Scanlon. Thank you for coming here today, Commissioner Bowden. Couple of questions. First of all, so this was taken from data collected from 2019, correct?
That's correct.
Okay, and you said you accessed some third-party data. Can you explain what you mean by that?
There's a number of different nonprofits out there that aggregate data, U.S. Census, there's census tracks, there's a million different data points that you can pull simply at your fingertips off the internet of people that keep this data on file.
Can you give me some examples of those third parties, or does somebody in your staff? I mean, if you like, you could send them to me offline because I realize we have limited time here.
Yeah, there are a number of different agencies out there that keep information. OPM is, I wouldn't call them a third party. They're a sister team member with us, but they do keep some property tax information. Our chairman mentions property tax. I would love to really delve deep into that. Again, I'm not picking on mayors, but if we really want to truly understand what the impact is to our residents, we're going to need to really get granular with that. But there is data out there, and I can get you a list of some of the third-party folks that have provided data to us. A lot of it's right off the internet.
Okay, and you used Accenture. How did you settle on Accenture for the compilation of this report?
Yeah, we had a open bid process. We interviewed, I think it was 4, maybe 5 different agencies or businesses that do this kind of consulting work. At the end, we felt that Accenture brought in the right team at the right price with the right people. They had everybody from people who worked as revenue commissioners in other states on their team, as well as economists. Tom Conroy's on with us, I believe. And we just felt very strongly about the team that they put together. And frankly, the price was right. So, I mean, between the two, we thought they were the right folks to do this. Okay,
and I gather the collection of the property tax data was one of the most challenging pieces because there's no uniform source for that. Is that correct?
It is a challenge, no question about it.
Yes. When you look at this, sorry, you're just looking at tax incidents. None of this includes any government transfer payments, which obviously affect total income.
That's correct.
Okay. And I think my last question will be brief here. So your new RAF unit, and obviously not the Royal Air Force, is this going to be made up of existing employees? Are these new hires? What are we looking at in terms of both the time you would like to set this up and a cost?
Well, we're going to use this tax incident study as a basis for us to build out the RAF. And we anticipate, I believe we budgeted 5, potentially 6 new employees that would work specifically for that department. And the reason for that is that I think all of us agree that often, I wouldn't say we're flying blind, but we are flying with information that could be better if we had a little bit more time to work on it. So one of the challenges that they'll have, aside from the tax incident study, is that they'll be working on, having a very robust library of information, of previous studies. They'll be aggregating studies from around the country. They'll be sharing data, not names of people, but data with other states to see where trends are going. And we'll be able to provide recommendations to you, to the chairman, about, hey, here's what Massachusetts is doing, and here's why they're doing it. In addition to that, during session, we get often asked all the time, if we cut this tax, how much will it be? And if we add this tax, what would it mean for the budget? And we really scramble with people that are oftentimes involved with other parts of the agency. Maybe they're doing audits. Maybe they're racing around trying to get collections up. So by doing this, we can have a team that will be able to really look at our revenue, to look at how and where and why we do certain things in the state, and then obviously do a lot of forecasting for you, for your committee, to say, here's what we anticipate coming in the next several years. The war in Ukraine is a perfect example. Gas prices continue to escalate. You can argue whether or not that's the only or sole reason for increasing gas prices. I'd like to know what's going to happen in 3 years with gas prices, and what does that mean for electric vehicles, and what does that mean for car sales and all kinds of things. And the RAF will be able to provide that information for you, for me, and obviously for the governor.
Okay, and you mentioned looking at other states' tax policy. I think that would be salutary. I know Chairman Scanlon put forward a version of Massachusetts 2.5 proposition. I know in addition to that, it included an end in mandates. I know Massachusetts also has in statute, when they have a certain budget surplus, they reduce the income tax by a certain amount. So I think looking at how other states structure their tax policy, and particularly if there are ways they, have similar collection, but have leavened or evened out the burden, would be extraordinarily useful. So I guess I'm coming to my time. Thank you very much, Commissioner, and thank you, Chairman Scanlon.
Thank you, Representative. We will next go to Representative Meskers, followed by Representative Farrar.
Thank you, Chairman Scanlon. Commissioner, I want to thank you for the report. I guess I'd make 2 principal observations or questions. One, the incidence report, if we're going to work on the standardization, or I'm hearing there's going to be an interactive dialogue going forward on future reports, I'd like to know from the DRS what they think they need in the way of tools to capture the information at the state level. And given the contract with Accenture, I don't know if we need to get an average of the 10 states with the highest growth factors, or 5 states with the highest GDP, population growth, economic growth, and maybe the 10 with the lowest. And if we can get some blended comparables on the tax incidence, I want to know if tax policy is indicative or predictive of economic growth.
Okay.
So I think that's a piece that in a vacuum, I can talk about progressivity or regressivity in taxes, but the implication on growth, I want to know if there's an incidence. So I want to be careful as to how I craft tax policy based on not just the incidence, but what is their predicative impact. So that would be very helpful. And I'd love to have some conversations about that going forward, maybe before we design a comparative on the tax incidence. But I think we're going to need more data to look at other states to figure out, is our tax policy one more regressive, more progressive, conductive to business growth or not? Because I think all of us want to see, and the governor often says it's growing the pie, not taking a bigger slice of the pie in terms of tax policy. So I want to make sure that we are capturing the right model there. That would be, I guess, the first piece of my observation on policy. The second is in the capture. It would be helpful to know within our surrounding states how real estate factors into their tax policy versus other taxes. And so, because it's going to be it sounds like it's going to be one of our major focuses. I'm hearing it from you as well, from Representative Scanlon, that it's a very, regressive tax. So I want to know what other people do, how they finance themselves, versus that real estate tax. And lastly, when you mentioned that one example of a retiree at 75 and the software earner at 150, given the change in tax policy in Connecticut, I think married couples up to 100,000 and individuals at 75 by 2024 or 25 will be exempt from the income tax. So we can't look at the property tax in a vacuum without looking at the overall tax liability of the individual. So I think at some level, the question on progressivity is both a question of revenue capture and revenue expenditure. And I'm not sure how we resolve that in terms of where we spend every tax dollar, right? Because you can claim regressivity or progressivity, but if you're a taxpayer and your appropriations are close to zero or expenditures in your district, you've got a pretty progressive system. So I don't know how we throw that into the mix. And I'm cautious, but I think that's an important issue. I can say for Fairfield County, the amount of tax capture and the amount of tax expenditures is a wide disparity there. So I don't know how we measure that in terms of progressivity. So I caution us on that. But thank you.
Representative Farrar.
Thanks, Chairman. Commissioner, thanks for being with us. And I do want to thank the leadership of the committee for pushing for this, bringing us together with DRS. It's great to be able to dig into this a little deeper. So, Commissioner,
Representative, excuse me, Commissioner, when you're not speaking, if you can mute, I get a lot of feedback from your computer for some reason. Thank you. Go ahead, Representative.
Oh, thanks, Representative Scanlon. That was very helpful for all of us. So, Commissioner, just a couple questions for you, and thank you again for being here. I really just kind of wanted to echo a little bit of what the chairman said. I appreciate your sentiments around that we've made progress, but I think if we look closely at the data, so many of the folks that we represent would say that we're very far from that, given that our lowest and middle income families bear 3 to 4 times the effective tax rate of our wealthiest. And I just wanted to hear from you a little bit about, in the tax data collection, have you been able to gather any information to break out this data in any depth by race and gender?
No.
Is that something that you would consider in a next step with the new department with RAF?
I think we could. I think, excuse me, I think that's possible. I would want to see what resources are out there. But yeah, I think we can probably get that done, especially using the census tracts, but yeah.
Thank you for that. Yeah, I think that's would be super helpful, especially as we're considering really the implications of our decisions and how this particularly affects likely not only our lowest and middle income families, but particularly our women-headed households and our household that's led by people of color. So any discussions we can have about the equity implications as you look at this data, that would be very helpful. And secondly, kind of to a little bit of the chairman's question earlier that he asked around, kind of flipping the conversation on the wealthiest in our state and the impact of our state policies on them. One of the things we've kind of seen, especially over the last couple of years with COVID, is we've had, any number of billionaires and millionaires in our state wonderfully get richer, but as I said, our low and middle income families have really been paying the costs in regards to their tax rates. Do you have a sense of how much our state could gain if we implemented a capital gains surcharge on our very high earners?
Generally, the incidence report really focuses on the current taxes that are in play. We have not run any models like that, but it would be a great task for the RAF to do and be able to get back to you within about 24 hours with some of that information. So we haven't done it, but it's a great example of what the capability we will have within the next several months.
That's very good to hear. And so are you saying in regards to kind of ramping up, this is something you're hoping your department will be able to start immediately with RAF, or what's kind of the timeline for you being able to staff up in this capacity?
We're currently in the plan design for the department. We will be hiring shortly. And this is exactly what this department is for, so that when legislators or our chairman or anybody has questions about what if we did X to our tax code, what does that mean? We'll be able to put a run together for you that's we know is correct, we know is right, and then you can make policy decisions off of. And then we'll save that. So 5 years from now, when somebody comes in and asks the same question, we did that a couple of years ago. Here's what we came up with. So it's going to be very exciting. I'm really pumped up about it.
And Commissioner, just to the point of the tax incidence report moving forward, I recognize we're having this conversation in March and was kind of curious, when you think about being able to provide this to the legislature moving forward every 2 years, is this something we could provide at the start of our legislative session for us to make decisions on proposals?
30 seconds.
Yeah, so the statute says December 31st. The statute passed, I think in the last session, gave us till February 15th or 16th. And I did take an extra week or two. So that's my responsibility because I just wanted to make sure that the information we had was correct. So the next study is due December 31st, 2023. That means by this coming summer, towards the end of the fall, we'll start scoping out how we want to get this done and begin our data collection.
Thank you, Commissioner. I know this incidence data and transparency will really help our decisions for so many of our constituents. So thank you for that. And thank you, Chairman.
Thank you, Representative. Senator Martin? After Senator Martin will be Senator Cabrera. Senator Martin, you're on mute.
Yeah, I have no questions.
Senator Cabrera, followed by Representative Carney, who I don't see his hand is up anymore. So if we've lost Representative Carney, then it would be Elliott after.
Thank you, Mr. Chairman, and thank you, Commissioner, for your presentation and for joining us here today. I have a couple of questions. The first question is, one of the things we often hear is if we raise taxes on our high earners in the state of Connecticut, that they will leave our state, thus depriving us of significant amounts of tax revenue. Usually the argument goes along the lines with work being so mobile and virtual that it makes it pretty easy for folks to, move to Florida or somewhere else, set up shop somewhere else. Have you seen any data or evidence of that? Perhaps not just in this study, but compared to the last study to prove that that in fact may be the case?
So, we don't track that specifically, but I'm going to tell you, we can feel the hit when somebody does move out because, usually it's a multi-million-dollar hit to our revenue. So while I can't give you direct numbers, I'm pretty sure the statute prohibits this, and I'm going to ask John Biello to weigh in here a little bit. We notice it in our returns when we're missing a tax filer. That's not the best I can do with that. John, do you want to just add in there a little bit?
Sure. Thank you, Commissioner. And Senator, just to echo Commissioner Boughton, we don't have any hard data, but I can certainly tell you from our experience at the department, and I've been with the department in tax administration for about 32 years, and most of that time was in our audit and compliance division. And I can certainly say, based on my experience, that the state has experienced some of our wealthy individuals move out of the state, particularly for the sunny shores of Florida. So it is happening. It has happened. We've dealt with taxpayers over the years. I personally have dealt with taxpayers over the years that have in fact moved. So it is happening, even though we don't have any hard data right now.
I'm assuming that's something, if we were that would be helpful going forward, perhaps for future studies.
Yes, absolutely.
And my second and last question is on the online sales tax. As you know, a lot of online sales tax, that's a growing part of our economy. And I'm wondering if you looked at how that may disproportionately fall on low-income earners.
Sales tax, by the way, online sales tax after the Wayfair decision has blossomed in the state of Connecticut. It's a consumption tax similar to when you buy something in the store. I don't know if it hits any one particular section differently or a group of people differently, but it's something that we certainly can take a look at. If I could just quickly circle back to your last question. One of the things, and it is part of our request this year, is I would love to get a task force together to look at the issue of part-time versus full-time residency in Connecticut. I think there's a way we may be able to recover some dollars and solve a problem that those people who decide to move out, basically encourage them not to move out, but also recover some money as well. So that's something that I think it deserves some talk and deserves a little bit of work. But there's very well a possibility we could establish some kind of part-time residency or full-time residency and change the way we calculate that. So I'd love to have a further conversation about that. And I don't know, John, do you want to address the online sales tax and how that impacts folks of lower economic?
Sure. Well, I can say that the proliferation of online sales is Connecticut has been a leader in bringing those online retailers on board in the collection of tax. States across the country have had a difficult time prior to the Wayfair case to bring on those online retailers. We were at the forefront, and the agency was very proactive in outreach and getting those retailers on board to collect Connecticut sales tax. And we are bringing in a substantial amount of money in online retail sales tax from online retail sales. I can't speak so much to how it's impacted some of the lower income taxpayers. We just don't have that data. But what I can tell you is that online sales are strong. Sales tax collection from that sector is very strong, and it's growing. Every month we get a report, and the dollars coming in from online sales are very strong.
30 seconds.
Thank you so much. Those are all my questions. I would just say, before I close, is that those are some of the things I think perhaps this committee and others could look at in terms of future studies. Is I think it's really important for us to start to look at how our tax system disproportionately impacts particularly lower income earners, and as Representative Farrar mentioned, different racial and economic groups. Thank you so much, Mr. Chairman.
Thank you, Senator. Representative Elliott, followed by Representative Nuccio.
Thank you, Chairman Scanlon. So the first question I have is based around this idea that I have is that raising taxes on the wealthy is not necessarily just to bring in more revenue. It is to ensure that we have an equalized tax structure writ large when taking into account all the different types of taxes that we have. So my question is, could we theoretically have DRS look at what changes to the income tax code would look like and how that would affect the bottom line amount of taxes or effective tax rate of each income decile?
Yeah, we'd be happy to do that for you.
All right, thank you. And the reason I ask that is I think that a lot of people who aren't well versed in taxes and the impact have this idea that you want a fair tax, you want an even tax for everybody. But then once you factor in all the regressive taxes that we have, to me, the progressive income tax is to offset how bad everything else is to get something a little bit more fair and a little bit more flat. So that would be really helpful. Do we have any information on how much additional revenue, additional servicers or auditors or folk over at DRS would bring in?
I'm going to ask John Biello to address that. We have been on a hiring tear, but he's uniquely positioned. John?
Sure, thank you, Commissioner. And Representative, that's a great question and something that we talk about regularly at the agency. Right, when we benchmark DRS to our peers, we are significantly lower than our peers when it comes to our audit coverage rate. For example, most of our peers are at around 3% of an audit coverage rate. What I mean by that is as a percentage of the total tax-paying population, most states are averaging about 3% and even higher than that. We're right about 1%, and in some of our tax types, we're even below 1% because of the low staff that we have, or the low numbers of auditors. We are doing some things outside of hiring to help that, to bring more efficiencies to the audit process. We're changing some of our procedures, and analytics is certainly going to help us do that with finding the right populations of taxpayers and making our auditors' time more productive. But on average, an auditor generates about $800 per hour. It's anywhere between $800 to $1,000 per hour. So if you calculate that out through the average number of hours per year that an individual works, that'll tell you, they're probably in the range of $2 million or so per year per auditor that will be brought in. And we are certainly not even close to the capacity, our full capacity, like I said, because we're so far below our peers. So yes, we do have the capacity at DRS for more auditors, and there would certainly be a very positive return on investment with those auditors.
Is DRS being proactive about seeking funding for those auditors? And it would seem to me that money that we'd be taking in is money that people are being tax avoidant with. Is that correct?
It is correct. There's a little bit of, there's tax avoidance, certainly. There's just common errors, complexity with the tax code. There's a number of factors that are at play here. To answer your question, Representative, yes, we are being proactive with that. Right now, we are struggling with retirements. We've got about 13% of our staff, and most of that 13% is in the audit area, that are retiring between now and July 1st. So right now, we're focused on getting our vacancies filled, and then we're going to deal with the growth aspect of it after the July 1 cliff. We'll worry about the growth piece of it, but it is in our plan. It is in our strategic plan, and we are moving in that direction. Yes.
Thank you, Deputy Commissioner. And then my last question is, I want to double down, and I hope my colleagues triple and quadruple down on the data about out-migration, because I have found that by and large, the sole boogeyman that we face when talking about tax equity is this idea of the wealthy leaving our state. And I would say that even in and with no disrespect, that in your comments, in the commissioner's comments, that it's a major loss when people leave the state. But then there's no follow-up. Well, these houses that they're selling, these multi-million-dollar houses, are being bought by somebody, and people with money are also coming into the state. And we need to know what that inflow and outflow looks like. We need to know what both sides of that equation look like. And so I would really press upon you fine folk at DRS to see if we could add that into the mix, so that we know, as we're keeping track of this tax data, how our changes up at the legislature affect that inflow and outflow. Because I know that over the last couple of years, we've seen an incredible inflow of population generally, but on the Gold Coast specifically, which means to me that we have an exceptional amount of money coming into our state right now. And with how rich the rich are getting and how much wealthier they're getting, I think that there is certainly room to maneuver there. So that would be my final comment there, with no real question. But I do appreciate your time and all the work that you put into this. So thank you so much.
Thank you, Representative Elliott. Representative Nuccio, followed by Representative Williams.
Thank you, Chairman. Hi, Mark. How you doing? So I don't necessarily know if I have a question or not, but I would like to kind of maybe see, like, I don't know if what everybody is asking for would fall into this, but I believe I saw a couple of years ago, there was research done that the average income of the people that were leaving Connecticut was significantly higher than the average income of the people that were coming into Connecticut. Now, I know COVID would put a change on that for the 20,000 people that moved to the state. But I think in general, the overall out-migration is higher incomed, even at the middle income level, than the average person coming in. I don't know if that's something that would be covered in this report or if that would be somewhere else. But I'm kind of more here to talk about taxes it's a scale, right? Expenses are on the other side of that. And I'm not interested in bringing more revenue to the state just in the term of taxes. I'm absolutely not. I feel like Connecticut is the second highest taxed state in the country. So the idea of bringing in more taxes to me is ludicrous if we're not willing to discuss what's driving those taxes. And from the property tax perspective, I guess I'm a little confused on some of this, and I would really like to sit down and talk to you about this in more detail. I'm a numbers person, I'm an accountant. So looking through all these, I like actual numbers, like Chairman Scanlon said. You know, I'm a little bit of a data nerd, I guess, as he put it, myself. But property tax is definitely an issue, but I don't necessarily, you know, when you buy a home or something, that is your property. I don't understand the idea that that other people you should be paying a different amount than the value of your home than somebody else based on your income, because the property tax is based on property and you're paying for your property, not somebody else's property. So that part there's an issue with property tax, but if we want to talk about the issue of property tax, then we have to talk more about the legislative responsibility or lack thereof, and the fact that the state of Connecticut has abdicated its duty, its constitutional obligation to provide an education for every child in the state. Property tax, 80% of any municipal budget, as you say, you were a mayor, you know, I was chairman of the town council for a long time, is education. And when we pass legislation that takes ECS money from 111 of our 169 towns, that means your property taxes are going to go up because you have to pay for education. So either the state starts taking the funding of education seriously and finds a way to fund it, and then removes that burden from the property tax area, you're going to continue to see this disparity. Every time we pass legislation that takes from one town to give to something else or doesn't fund it properly, means you increase the property taxes, because we also have legislation that says you cannot reduce a Board of Education budget, which is 80% of a budget. So we legislate ourselves into these corners and then say we need to raise taxes. I'm here to say we need to lower the expenses, and we need to figure out a way to adequately fund the things that are important in this state, of which education should be the #1 priority. So I definitely want to sit down and talk to you, because you had some stuff in here that I don't necessarily understand, which taxes were included, which taxes were not included. You know, I really kind of looked into the information that you had on there, that the income tax was the most, I want to say maybe equitable, you said, from the perspective of how it was hitting everybody in an overall census. And the sales tax being a consumption tax is hard. I guess I really want to kind of understand what's in it, what's not in it. So if possible, I'd like to kind of sit down and talk to you and your staff to really figure out how this report works, because I think it's a valuable tool. I think that's it. Just thank you for the work, and please, if I send you an email, let me know what you have for availability and plan to spend some time. Thank you, Chairman.
The nerds are coming for you, Boughton. Get ready.
Right, let's do that, Sean. We'll get a joint meeting of the numbers people. We'll sit down with some Excel documents and go through this.
I would love it. Let's do it.
Happy to do it.
Okay. Representative Williams, followed by Representative Ziogas.
Excuse me. Thank you, Chairman, for hosting this, and Commissioner, thank you for your participation. And when you have that nerd meeting, this Bryan alum will gladly be there first in line, particularly now that we have made our first NCAA tournament in March Madness. Got to throw that out there. Several quick questions. Commissioner, what is the goal? Because I think we need to define terms. So what is the goal of the report again?
Tax incidence is a study to determine the burden of taxes on the individual taxpayers.
Okay, because so thank you for that. Second question, kind of in congruence to that, should our tax policy for the state of Connecticut, should one of our goals be to have a progressive tax system?
I think that's a decision for the legislature, but if you're asking my opinion, I'm happy to share. I think there should be some progressivity in any application of taxes. I also will tell you that we charge over 800 different fees to the residents of this state. And I think that they should be included in a report like this, because this is not the complete picture of what people pay to live in the state of Connecticut. But having said that, absolutely in your core policies, which is what this report studies, there should be progressivity, sure.
Because when you first answered the chairman's question around, and just maybe just to make sure again, there is no information or data on if our highest earners had the same effective rate as some of our lowest earners, how much money would be brought in. We don't have information on that.
I think we have information on that. I think it's the only thing I was pointing out was the impact. You know, I'm always concerned about what does somebody pay. But look, I mean, if you make up a number here, $100 million a year, and you pay $1 million in taxes, is that the same as somebody who makes $50,000 a year and pays, you know, $10,000 in taxes? No, right? I mean, it's a lot easier for the person who makes 100 million to pay the million than the person who's making 50. So I'm always concerned about that. I was as a mayor, as a policymaker, and you know, the advice when our chairman and the governor asked, it's something I always want to look at: is what's the impact to the people out there, and who does it impact?
Thank you for that, Commissioner, because we actually agree on that. That if you do have $100 million and you are taxed at 1%, what you will be missing is probably a rounding error. Whereas if you're making $20,000 to $30,000 for a family of four and you get taxed 1%, you will feel that. You'll feel that in your wallet and your grocery budget and so on and so forth. In the next studies, and I'm thankful for your encouragement to make sure that this study is done more often. I think using almost a decade-old data is clearly not sufficient for us to make, like I said, timely decisions in what we do, which is every 2 years. And the next one, what opportunities are there for comparisons for other states, particularly in some of our neighboring states like New York or Massachusetts?
Well, that's a great question. And so this study uses data from 2019. The 2023 study will use data from, well, that's okay, 2020. But to be able to compare ourselves to other states would be, I think, an interesting chapter in this study. I will tell you that if you're looking for other studies like this, the gold standard has been Minnesota. But Minnesota does their study religiously every year, and they've done it for about 20 years. So they've really worked out all the bugs and kinks and being able to understand what the incidence is. But yeah, absolutely. And we did look at other states, and I routinely interact with my colleagues across the Northeast and really across the country.
Awesome. I guess my sort of last concern. I think one more or several more questions. I think actually, if I have the time, Bree. I see Bree looking at me. Representative Elliott began to talk about where the folks are going and who's moving in. We do agree that these folks aren't just leaving the homes and keeping it open. Like they're probably selling these homes, correct? When we're talking about they're moving to Florida.
Many times they are. You know, again, this is all anecdotal, but again, I would love to explore the concept of not limiting people to living in Connecticut for 180 plus days. In other words, we would allow for what we would basically charge people for the length of time they're here and and not charge them for the length of time on a prorated basis that they're not here. I think there's a way you can do that. And I think people who live in big homes may not be apt to sell them if they know that they can stay more than half a year in their particular home, even if they have to pay a little bit more. So there's definitely some opportunity there, but sure, they sell them and they sometimes take a loss. In this kind of market, they're going to make some money.
And and that time away is to lower their tax liability, correct? There's no other like social.
Again, anecdotally, we know that goes on. Yeah, absolutely.
All right. We do need a heck of a lot more time than 5 minutes. So, Representative Chairman, when we do have that in-depth Excel meeting, I will gladly be there. Thank you for your time, Commissioner.
Thank you, Representative. Representative Ziogas, followed by Senator Fazio, and then Representative Cabros DeGraw. I'm sorry. After Fazio is Chafee, and then DeGraw. Sorry.
Okay. Yeah, Mr. Commissioner, regarding that slide where we had the retiree and the software, I happened to be able to look at their balance sheets while we were waiting. And I found out that the retiree had recently sold his $700,000 home and moved down to something more manageable, $150,000 condo, no mortgage, and he had money in the bank. He had a generous state of Connecticut pension that we've been exempting quite a bit of lately. Now, the software engineer, she's a hardworking young lady. She's got student debt up the butt. She's got a mortgage. She's got travel expenses. She's got other expenses on a day-to-day basis. So my conclusion would be different than yours, is that the retiree had much more disposable income, and the property tax damage to him is far less than the property tax damage to our software engineer. So I'm saying that maybe when we look at these numbers and we look at income deciles, that we ought to have some concept of net worth involved in all of that. Because there are 401ks, there's IRAs, there's pensions, there's income that aren't accounted for in all cases. And the expenses against the middle income, the younger people, is probably more damaging than against the older people. Let me just make one more remark regarding, I think, Representative Nucio's comment about the people leaving, or Elliott's maybe, I guess. I saw the same study, and the people leaving and the people coming in, there was a differential, people making less that are coming in. But I would also suggest that the guy coming in is probably coming in at a younger age, moving up into the bracket that he's likely to gain more in the next 10 years. And when he leaves, he'll be in a similar circumstance. So I don't think we can say that we're losing that much in terms of that swap out. But anyways, there are some other factors I think that we ought to be weighing in terms of when we talk about this tax policy and the incidence of what the property taxes are impacting some of our people. That's all I have to say. Thank you.
Thank you, Representative. So Senator Fazio, followed by Representative Chafee.
Thank you, Mr. Chairman. Thank you, Mr. Commissioner, for this interesting report. I read it with great interest. I have several questions. I'll try to do them quickly. The first is, since Connecticut introduced the most progressive aspect of its tax structure, which is the income tax, in 1991, what has happened to the poverty rate in Connecticut in comparison to other states?
I wouldn't have that figure at my fingertips, Senator, but I don't know if DC Biello has that figure at his fingertips, but I don't have that right in front of me.
Yeah, I would not, Commissioner, sorry.
I figure because we're looking at outcomes, the actual outcomes for people who are lower and middle income, that would be important. So I did check. The U.S. Census says since 1990, Connecticut's poverty rate has increased more than any other state in the country. And it's one of only 13 states in the entire country to see its poverty rate increase. Second question is the federal government's tax structure, and the federal government obviously collects a lot more in tax receipts than states do per person. Is the federal government's tax structure progressive or regressive?
In the sense that they use an income tax, which generally is considered a progressive form of taxation, you could say it's progressive. However, there are so many different write-offs and deductions that you can take that it'd be hard to argue that it's completely progressive. In some ways, you could argue that it's regressive. It depends. If you had a flat tax, that was based on a flat rate that was based on income, then potentially you could have a very progressive system. But right now, I would say it's somewhere in between.
You know, Do you know how the US tax structure's progressivity, are there any studies you've seen comparing it to other developed countries?
I have not. John, have you seen anything?
I haven't seen anything recent. There was some old reports, Senator, that I read that does compare it to other developed countries. And for the most part, the federal system of taxation is on the progressive side when you look at benchmark it against other countries. And for some of the reasons that Commissioner Boughton mentioned, you've got a series of itemized deductions. You've got an earned income tax credit. You've got various other credits for example, for energy efficient, purchasing energy efficient products and things like that. So the federal system does have a series of progressive elements, I guess you could call it, that does shift the tax or push the tax over to that progressive side, particularly when compared to other countries.
Yeah, and I would similarly argue that that's a good thing. There's a 2008 study by the OECD, which is a large intergovernmental panel, or basically like a large intergovernmental think tank, that said that the U.S. had the most progressive tax structure of any country in the developed world because it relies more on the income tax, and it also has a smaller overall budgetary burden, so it doesn't rely on sales taxes like a lot of Europe.
That's correct. That's the study I was referring to, exactly.
Yeah. Are you aware, kind of have an impression of what the economic literature says, which forms of taxation are more punitive or negative towards economic growth? The corporate or personal income tax, sales tax, or property tax?
I'm personally not. I think that was where Representative Metzger was kind of going with his assessment. I would love to see the impact of some of these taxes on the economy. We did have several economists that went through our report, but in terms of reviewing economic growth in other states, in other countries, and what works and what doesn't, look, I think the best tax you can have is no tax. The best tax incidence you can have is no tax. But at the end of the day, we know that's not realistic.
30 seconds.
There's another OECD study actually around a similar point in time that says that that ranks the punitiveness of taxes towards economic growth. The first is income taxes, the most punitive, most anti-growth, then sales tax, then property tax. Connecticut, which has a high tax burden, relies heavily on income taxes, has had very low economic growth, has seen poverty increase over many years. We want to see the low and middle income families in our state do best, and they've been suffering, and that seems largely because our overall tax burden is very high. So I think that should be the focus of the committee's work in future years. And I think, and I also thank you for the hard work on this study. It is very interesting.
Thank you, Senator. Representative Chafee, followed by Representative Cavros DeGraw.
Thank you, Mr. Chairman. Thank you for being with us this morning, Commissioner. Definitely appreciate you going over this report. Just wanted to start off with a comment here. I think it's kind of getting lost in the debate a little bit. I just think that it's a shocking figure that 772 individuals in this state have as much yearly income as 850,000 people. And as a state and as a country that used to really pride its middle class and how robust our economy was at allowing people social mobility, I just think that's a shocking figure. 67% of the people in this state are making under $74,000 a year. I know that that's kind of not really germane to the tax committee discussion, but I think it just points out how broken our economy was. I know a lot of the discussion has been on individual taxes here. I was wondering if you could talk about the corporate income tax a bit. I believe it's figure 8 on page 15 shows corporate income tax as a percentage of business income. small businesses with AGI of less than $500,000 pay a much higher percentage of their income in taxes than businesses that earn over $1 million, and many that earn over $1 billion a year says they pay about 0% of their income in taxes. I just wonder if you could kind of give some insight onto why the business tax is so regressive in this state.
Okay, John, you want to address that?
Sure. Thank you, Commissioner. And Representative, I think if we put some context around those gross receipts brackets that are there, that may help with your question. When you look at the ninth bracket there, the taxpayers or the corporations that are greater than $1 billion, we're looking at taxpayers or corporations that are multinational, multi-state. These are the Fortune 500, Fortune 100 corporations that are out there. So when we say that it's $1 billion in receipts, that's their enterprise-wide sales, their total sales for the group. They may have very little activity in Connecticut, which would result in a smaller percentage of tax being reported as a percentage of their income. Some of the lower ones, the ones that are in the first or second bracket, the $100,000 and $500,000 sales, those are probably Connecticut brick and mortar, Connecticut-based businesses that are located here, and 100% of their activity is here. So therefore, they're going to pay as a percentage a little bit more than as a percentage of their sales than what those multinational companies would pay that may have a little fraction of their business here in Connecticut. So I hope that answers it for you. There's a theory out there called apportionment, where those larger companies are apportioning a very small amount of their sales to Connecticut, and that's the reason for the disparity there.
Okay, that's what I was thinking. I was curious.
Okay.
Another question on the kind of methodology of the report. I'm happy to hear that the commissioner believes we should be doing this more often. And my background, I work as an engineer, definitely another data person. And I feel without good, consistent data, it's very hard to make good decisions, frankly. So I was just curious, why was the methodology changed between this report and the one done in 2014? Because I feel like it's kind of hard to compare the two reports. I believe the one in 2014 was based on household income, not individual income, and also included a few additional taxes than the current report. I was just curious why the decision was made to have different methodology.
30 seconds.
Yeah, that's a great question. So the additional taxes that were added in 14, I don't know why they were put in there. I mean, it was up to the commissioner at the time, but that's not what the statute calls for. And so I think I don't think the agency can define or divine what the legislature intended by us doing this report. So I wanted to reset back to what the statute calls for. And then if there is additional taxes that the legislature would like included, we could just amend the statute. I think that's a fine idea. I don't have more data, the better as far as I'm concerned. But I wanted to make sure that we had a report that comported or complied with the statute. And I wanted to make sure that the methodology we could replicate every 18 months or so, which is what the law calls for. So I didn't want to have to reinvent the wheel every time we did this. We found it easier to use a different methodology. And I don't think even if we use the same methodology, you could compare the two reports. I think data from 2011 versus data from 2019 is not really comparable anyways. But as you mentioned, that's why we should be doing this on a much more frequent basis. And that's what we're going to do.
All right, thank you. I would just suggest going forward if we kind of create a certain benchmark. So, subsequent reports would be easier to compare to the previous. But thank you very much for being here today. Thank you, Mr. Chairman.
You're welcome. And just for members who may have joined later in this presentation, we did discuss this earlier. We do have a bill before us this year that would try to bring some uniformity to this, and certainly are working with the commissioner's office and his team to try to get different data points that they may need, especially on the property tax side, so that we can make sure we're getting a more holistic picture every 2 years, as the commissioner stated. All right, seeing a few more hands, just as a reminder, we're hoping to finish up this hearing at 11. So if you have not asked a first round question, please get your hand up. If you have a second round question, just get it ready and we'll get to you in a few. So Representative Cavros-DeGraw, followed by Representative Paletta.
Thank you so much, Mr. Chair, and thank you all for being here today. You know, I would say that probably all of us on this call could agree that the thing we hear most from our constituents, be they upper middle class, or working class folks, is about taxes, right? And I think we have to have part of the conversation that, you know, the average middle class family with 2 kids pays much lower tax in New York than they do here. And then when we look at the data, 86% of the taxpayers that are actually leaving Connecticut make less than $200,000 a year. And those are folks that we certainly would want to have living here, working here, raising their families here. So I am just putting it out there that I think we need to be more concerned about that middle class flight, so to speak. I wanted to sort of circle back. I know this data was through 2019, but obviously, if there's a way for you to talk about how, for better or worse, the pandemic has reshaped tax incidence, I would love to hear a little bit more about that.
Sure, that's a great question, and it's something I'm very interested in seeing the next report too, for that very reason, because we'll take into account a quote pandemic year. How does that impact us? You know, I think you'll see that there was a lot of money that was distributed by the federal government, by state governments across the country. I think that put a lot of money into circulation, which meant there was a lot of purchasing power was expanded. There was a lot of bills and responsibilities for residents that were waived. So I think your sales tax numbers are through the roof, but I think it would be interesting to see, you know, how does all those various programs that came out, how did that impact our economy in that aspect? I do think working at home, you know, we haven't fully vetted out in terms of teleworking and what the impact will be on people's overall tax ability and their ability to depreciate their properties on their federal return. So I think there'll be some interest about that. And I think that the burden, you know, of taxes might have changed a little bit, given the fact that there were some service industries and sectors that never recovered, even now, and it's still not covered. So I think it's going to be fascinating in terms of what actually happened. It's tough to say right now. It would only be anecdotally. I think you had people moving into Connecticut. We had people moving out of Connecticut. I think we had people moving to areas that were less populated, less densely populated. I think that's going to play a factor here. I think it's going to be interesting. Do I have any real solid, this is definitely what happened to our tax policy? No. But I can tell you that there's a lot of data points that I want to look at because I do think there's been some change in some of the ways in which people pay and what their responsibilities are.
Okay, thank you for that. And given that 2019 data and the regular consensus revenue estimates, is there any way you could tell us how effective rates have changed since March 2020?
John, you want to address that?
Sure, Commissioner. I'm not sure that we can do that at this point. We don't have any data right now. I apologize, Representative, but we can certainly look at that. That's an interesting question.
Okay, perhaps when we have our nerd meeting of the minds, we can get that answered then. So thanks so much, appreciate it.
Representative Paletta, followed by Representative Carney.
Thank you, Mr. Chairman, and thank you to Commissioner Boutlin, Deputy Commissioner Biello. It's nice to see the Deputy Commissioner is from the Grade 68th District, same town as me. So nice to see you on the call, and thank you for a fine job for both of you this morning. My question is very simple. Actually, two questions, very brief. One, I think the question on our minds here is, of course, in the tax incidence report is how much money does an average Connecticut resident pay back to the government? And I'm wondering if either of you could help me answer this question. If you were to factor in federal, state, and local taxes, is there an average number, put a ballpark in there percentage-wise, that the average Connecticut taxpayer pays back to the government? Is there a number out there that's readily available? Through you, Mr. Chair.
Yeah, I'm not aware of one. John, do you have sort of a all-in number for somebody?
Yeah, I wish I had something for you, Representative, but I don't. That's a good question. I'm sure there may be something out there, but I don't have anything off the top of my head. Sorry.
Thank you for that. And you know, it's an interest. I don't have the answer to it, but you know, in my talks with constituents and people around the state, some people have suggested that that number is as high as 50-60%, meaning that between your property tax, your local taxes to the municipality, state income tax, federal income tax, and the gas tax, and it goes on and on. It could be up to 60% of your income. So at the end of the year, it's something to think about, that we could be paying back potentially over half of our income to the government. And that certainly weighs down, especially throughout the pandemic. And now, you know, with gas prices and other prices soaring. My second question really kind of goes on the point of this, that we have talked for many years about making the sales tax in Connecticut more fair. This is something that I think is worthy of a conversation. It might not happen this year, but there was a bipartisan effort in the last couple of years to sort of tax more, but lower the rate. And I was wondering if either of you could comment on that and what your thoughts were. So for instance, there's a number of exemptions. And for whatever reason, you know, someone hired a good lobbyist, or someone had an in and they got that exemption. And we don't collect taxes on certain fees or services, but then we charge, you know, 6.35% on everything else. Is there a way to make it more fair? So, hey, you pay for what you use, rather than there's a list of exemptions. Is that something that either of you could talk to? And that's my final question. Thank you.
Sure. With the caveat, Representative, that we implement policy. We don't necessarily make policy, although again, I'm happy to provide an opinion if asked.
Sure. An opinion would be great. Thank you.
It has always fascinated me as if we had a much lower sales tax, but applied to almost everything. There's a report that I did at CCM, which actually recommended that happen, with the provision that if you are on SNAP or a federal program, WIC, or any of those programs, that you would get sort of a credit card. It would look like a credit card. You would bring it to the store, and they would swipe that, and you wouldn't be charged tax on certain goods and services. I will tell you this, that the sales tax is the number one tax that people don't always remit. And in our audits, we find people that have failed to collect it or refuse to turn it over. You hear a lot of talk about the tax gap, and part of the feedback when we talk to people that we get as well, the forms are just too complicated. You know, try figuring out 6 and change on a $57 sale. I don't have the time for that. So there has been a lot of discussion on that. Senator Fanfara over the years has been very interested, as I have been, in point of sale machinery that will just immediately add in the sales tax, so that person isn't stuck having to figure all that out while they're trying to make a sale, particularly in middle-sized businesses. So I think that area is fertile. I think you could raise more revenue. You could lower the overall burden. And I think you could make provisions for those that are less fortunate to not have to pay it. But it does require some political will. And, you know, it always comes down to, well, you know, you want to charge tax on healthcare products. What's wrong with you? You know, that kind of thing. So, and so we keep carving new products out. So there's opportunity there. And it would be a great part of that larger conversation that I want to have about recalibrating our tax system in general.
Thank you, Commissioner. And that really was really hitting on my point, was carving certain services out. And I think we're going to talk about fairness, and we're going to talk about helping the middle class, which has been talked about by many of my colleagues here. Then we have to start by saying, well, the best way to help the middle class and the lower class is to cut taxes. And the best way to do that is to make our tax system more fair. So that way, folks that are going to the store don't necessarily have to pay 6.35% on groceries or, the gas tax, whatever. So I look forward to listening to the conversation, but I would definitely support going forward this committee getting together on a bipartisan basis and looking at how we can lessen the burden for all Connecticut residents rather than carving out different items each year that we see fit and then leaving the rest of the burden to those that it hurts most. So sometimes we pass a bill here trying to help people, but we actually hurt the people that we're trying to help. Thank you.
Thank you, Representative Paletta. Representative Carney, and then it looks like I think we've come to the end of round number 1, and we'll do a lightning round number 2 after Senator Fonfara goes after Representative Carney. Thank you.
Thank you very much, Mr. Chairman, and thank you, Commissioner and Deputy Commissioner. It's always nice to see you, and I appreciate the report. I mean, I wasn't going to talk about the, sales tax, but my good colleague before me did. I've always thought, a good place to look at tax policy changes is how we tax food. I'm not sure if you've looked at that. I mean, I'm hesitant to eliminate, sales taxes. It is a consumer tax, but tax policy should almost in a way kind of dictate what's good and what's bad. And I've always been on a kick to kind of make healthier alternatives or possibilities. Like I've proposed getting rid of the sales tax on fitness centers or gyms and stuff like that, because it would help potentially reduce the cost of using those services and alleviate potential health problems that oftentimes taxpayers have to pay for anyway. So I think that'd be something that I might recommend looking at. The tax policy on food is sort of all over the place. And that's just a recommendation, but I do agree with Representative Paletta on potentially where we can reduce some of that burden. My question, and I apologize if it's been asked, but it's sort of one of those things that I've been thinking about. I've heard a lot about, the property taxes, and I'm not saying, other states, obviously, the county government system is much more is much more important. I mean, here it's sort of counties in name only. And I have heard, potentials. Well, what if we, made the COGS a tax collecting entity? I mean, I wouldn't support that. I mean, but what, has there been any studies to look at what if, and it would take a lot, and I'm not sure exactly how it would be done, but how it would look if counties were sort of given power again as that sort of authority to collect taxes to give back to the communities. Towns in Arizona, people in Arizona pay much lower property taxes, I believe, than we do here, and they have a much stronger county government system. So I'm not sure if that's been looked at all. Plus, it could potentially cut a lot of bureaucracy. So I don't know if you've thought about that at all.
Yeah, sure. Yeah. Right before I left office and before I left as president of CCM, we began the process of working with our federal partners to get the COGS recognized by the federal government as a county. That does not give them tax collecting authority. Only the legislature can do that. However, that recognition allows the COGS to be able to apply for a lot of the county-only grants that federal governments, serve and distribute. So I think that recognition will be coming through shortly, within the next several months. And I think that will go a long way to helping lower the overall tax burden, because we'll now have access to billions of dollars of grants that we couldn't because we didn't have counties and they were only available to counties. So that recognition by the federal government is crucial and critical. The executive directors of the COGS have been working really hard on that. And again, it does not give them the authority or ability to collect taxes. It simply allows them to be viewed under federal law as a county and therefore be eligible for all the grants and revolving loans, et cetera, that are available. But getting the COGS to think as counties is certainly a positive thing. And you're 100% right. it makes our system here in Connecticut very inefficient. I know we moved away from that because people didn't want to pay 3 or 4 levels of taxes. I understand that. But on the other side of that, the federal government loves to see multiple communities working together to fix roads, sewer systems, drainage, whatever the case might be. And consequently, they design their grants and their appropriations for regional approaches. So I think there's some value there. I only think only the legislature can make a determination about whether to allow them to collect taxes. There have been a number of proposals over the year, i.e. splitting up a local sales tax, things like that, that the COGS would be responsible for. But, you know, should that be a discussion in a longer term over maybe the next year or so in terms of our tax scheme here in Connecticut? Absolutely.
Okay. Yeah. I appreciate that, because my concern too is I wouldn't want to see these another level of taxation. I'd want to see what about eliminating one and creating one, and how that would impact, the folks' bottom lines, with the idea that we want to save everybody tax money, not, make, let's, say Old Saybrook folks pay more to pay for services in a different town. So I think that'd be something I'd be curious to look at, with that hopefully ultimate goal of how can we reduce everybody's taxes, if that's a possibility, by making government more efficient. But I do appreciate the report, and I look forward to talking to both of you again soon. All right.
Senator Fonfara.
Thank you, Mr. Chairman. Thank you, Commissioner, Deputy Commissioner, for your presentation. I'm going to do a lightning round here so I can do this within my time. First, I want to say that what's not discussed here today so far, and I understand why, but I want to make a point that it's important, is the best way to address a lot of these issues is to grow our economy. Maybe not today, Commissioner, but I'd love to hear your position on the role of DRS in helping to grow our economy, instead of just being an enforcement arm of government, or opining on our tax structure as you are today with respect to this document. I want to just take a minute to go to Representative Paletta's question about how much we pay. And in fact, your document does tell us how much we pay. And I understand, Commissioner, your point about that decile 1 is not exclusively folks who are in a very low income category, but I've got to believe when nearly 50% of all taxpayers, individual taxpayers, are in decile 1, that's got to be the overwhelming percentage of folks who are in that category. Those that are, unless you have evidence otherwise, we've got to believe those are just a lot of lower income folks in our state. And your report indicates that, in fact, the percentage of their income that goes to taxes has increased since the last study to 24%. Fully 1/4 of their income goes towards taxes. Then when you go to the very wealthy decile 10, that group pays 6% of their income. I don't know if anything gets any more stark than that, but that your own report answered Representative Paletta's question in a very stark way. Commissioner, can you tell me, when did you receive the report from your vendor?
The week of February, and I don't think it was a week, but it was right around February 15th. We then spent about a week and a half reviewing it and sharing it with some of our economists within the state, get their opinion, see if we were missing anything as in draft form, and then put the final stamp on it and distribute it out.
And is the report any different from what we've received, or what you put out versus what you received from the vendor?
I believe we've added some pieces about shifting. There's a couple paragraphs in there about when we do a tax, what does a company do with it? All the economists said to a T, after several years, all companies, corporations shifted to the customers. But we wanted to take a look at, well, what if they only shift, if they eat 50% of the tax and only shift 50% of it, which we did do a run on that. Other than that, it's, you know, typographical errors, things like that. But other than that, it's pretty much what was done.
Thank you. Just as a note, less substance, but I think important for those who legislators, we're not all accountants. And yet I think every legislator in Connecticut, in the legislature who wants to know this stuff and understand it. I'm a little disappointed that the document isn't, you're a very plain spoken person. And I say that in a positive way, but I don't believe your document is written in the same manner. And I would encourage you going forward that you consider that. You have some definitions, but you know, legal incidents and economic incidents, and I could go on about that on the long run. Look at the definition of long run. If that doesn't throw people to want to turn the page or shut the book entirely, but I'd ask you to consider that going forward. Earlier, you in your remarks, you mentioned that the tax structure in Connecticut is balanced. What did you mean by that?
I mean, when you take out property tax, I didn't say it's balanced. I said it's made progress. Maybe I did say it was balanced, but that's not what I meant. How's that? It's made progress to being somewhat fairer. In other words, between each decile, it's about 1.1% change, right? But is there work to do? Absolutely, no question about that. And when, of course, when you lay, you know, as we talked about ad nauseum here, when you layer on the property tax, it's a real hit for people.
When we went to the market-based sourcing for the corporate income tax, we did that as a way to attract more companies to be located here because our tax structure favored locating in Connecticut versus not. And if you don't have any information on this, if you can get it to the committee, if that policy change has in fact had an effect, its intended effect.
Sure, John, can I just ask John to maybe respond to that, Senator? He's been here a long time and he might have some insight.
Sure, Commissioner and Senator, that's a great question. And it really, I think what that policy change did was it benefited Connecticut-based companies. So I'm not sure that we can certainly go back and look at the data. I'm not sure that we'll see anything in the way of incentivizing businesses to move here. But what it did was it didn't penalize taxpayers for remaining here. I think we can look at it from both sides of that, and we'll certainly look at that and see if we can get you some data.
Last two questions. One is this more political, I guess, but maybe not entirely. And I certainly am not defending millionaires, but our tax structure for decile 9 and 10, I would argue is discriminatory in the sense that, or regressive, better word, regressive, in that if you make $500,000 a year or $1 million a year, a lot of money, you know, I wish everyone success in this regard. But if you're making $40 million a year, you're paying the same rate as the $1 million person. And that, again, hard to defend the millionaire in terms of, you know, they're doing pretty well. But if I were a millionaire, which I'm not, I'd $1 million a year or $2 million, I'd be offended by the fact that somebody's making $25 million a year is paying the same rate as I am. And that's a different perspective than what we normally hear, which is, you know, let's tax the rich and everything. It's about fairness even within that category of earners. And I don't know if you want to weigh in on that, Commissioner, but that's an observation. Lastly.
No, I know. Oh, go ahead. I'm sorry. Go ahead.
Go ahead.
I was just going to say, I think you bring out a valid point. I think that when you hit that top decile, and like you said, there's a vast disparity between those folks. Maybe a businessman or somebody who owns a very successful couple of restaurants is making close to $1 million versus somebody who's a hedge fund guy who's making $600 million a year, but they pay the same rate. I would say I try to sort of balance that with how much are they paying. Percentage-wise, it's the same, but obviously, if you're making 600, 6% of that is a lot more than 6% of $1 million. But I think there's an issue there, and I think it merits further discussion. I think our entire tax structure merits further discussion at some point. But that's definitely a valid point that you have.
Yeah, and my last question was how certain information is arrived at with respect to the corporate income tax and how it's. You spoke about this earlier. Who pays ultimately? And I think even within the corporate income tax, even if you're a company outside of Connecticut, but you have a presence here in terms of you're selling into Connecticut, if in the end, well, with respect to the corporate income tax, if you look at how it's broken out, and I don't know the answer to this, it ascribes this in a breakout. I don't know if your report does, but 2014 did. Like labor is listed as one of the categories of how the corporate income tax incidence is, and I don't know how they arrive at that. Maybe you could, your staff could help the committee understand that. But what that means, as I understand it, is that that the tax is paid in certain different ways. One is they pay less in terms of wages. That's been explained to me from OFA as to how that tax is distributed. It isn't always that they actually write a check to the state. And if you could tell us how that is arrived at, it would be very helpful.
Sure. I wasn't here for the 2014 study. John, do you recall how they arrived at that figure?
Sure, Commissioner. The 2014 study did go into a little bit more depth in the sense that it took the distribution of taxes, and Senator, we can use corporation business tax as an example, and it laid the incidence of that tax onto wages, labor, landowners, cost consumers. There were several different sectors of the economy that the report showed where the incidence fell. We weren't quite sure how that was done back in 2014, and because it was so many years ago, it was not included in this current report. It's something that we can build on, and as Commissioner said at the beginning of the presentation, this is foundational, and it's going to be improved upon and built upon as we move forward. And that's one of the areas that we discussed internally where we can explore and see what the right way to represent those data sets are.
And just lastly, really quick, and I appreciate the indulgence of the committee. Last year, Commissioner, the committee voted out, it didn't go beyond the committee, but we did vote out a bill that tried to recognize the regressivity of our tax structure overall, which your report substantiates. And that is the consumption tax that we voted out. And that sought to identify or address the fact that much of our tax structure is blind to income, much of it. You've identified the major pieces, but those that weren't included are also, except for the gift and estate tax, very regressive. And the consumption tax attempted to do that because, as an example, if we could do this, and maybe we have the technology now to do it, but we don't. If I make, let's say, $250,000 a year, and you made $25,000 a year, when we buy something in the store, it doesn't recognize. If we had a credit card or with a chip that recognized our income, by rights we would be taxed. I'd be taxed a lot more at that point of purchase than you would. But we don't have that. And the consumption tax sought to address that. It didn't go beyond, there wasn't support for it. in the administration, or I suspect in certain circles in the legislature, it didn't go anywhere beyond the finance committee, which I'm grateful that we voted it out. It's not before us again this year, but that's the kind of thing that I think can be done to recognize it's not about taxing people unfairly. It's about recognizing that our current structure is not in balance, but imbalanced. And I thank you very much for your answers, and appreciate the indulgence of the committee. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Okay, I see Representative Paolillo, who did not ask a question in the first round, so we're going to go to him. And then we will go and quickly do a lightning second round. This time I will limit everybody to 3 minutes just so we can kind of keep our time going here. But first, Representative Paolillo.
Thank you, Mr. Chair. Thank you, Commissioner, for being here. Just a quick question around property tax and follow up on one of your answers before, because this is looking at 2019 data, pre some of the pilot reform and the three-tiered program that we looked at and voted out last year. I wanted to ask you if there was any analysis, further analysis in municipalities where maybe tax exempt, grand lists are maybe tax exempt by 50% or 60% because of universities, because of state property. Many urban and rural areas suffer because of that. And obviously then correspondingly, that burden is placed on the taxpayers there. So I wanted to ask you with data collection and analysis, if any thought, any ideas from there, because that burden is then, lacking growth in a grand list because only half of it can be taxed. And then those corresponding taxpayers are picking up that burden and the lack of growth because of the lack of ability to collect. Any thought there? And just wanted to get your answer for that.
No, that's absolutely a interesting area that's ripe for exploration. It's part of the reason we need we want to dive deeper into the property tax side of things because of the exempt properties. It was a problem when I was mayor for 20 years. It's a challenge for Hartford, Waterbury, some of the bigger cities. So definitely, I would love to see how does that enhance the incidence, and then how is that passed on to property taxpayers? It's a really good question.
So would there be a way to break it down by municipality or to break it down by zip code to really look at what those burdens are on the middle class, on working families as a result of not having that ability at the local level, as you can appreciate as a former mayor, or CEOs not being able to, have that ability to go out and to grow the grant list or to be able to collect from 100% of it?
Yeah, I believe there is. We'll need better data and a common template of data from our municipalities. But I think that the mayors that I've talked to and the first selectmen I talked to, they want to participate in stuff like this. They want their story told. And I think our new department, the RAF, will be able to pull this together, and you'll be able to see what's the incidence and the burden based on, like you said, zip code and on that specific community. And then how is that passed along through the mill rate? So I think there's definitely opportunity there. And that's some of the stuff we really want to explore for you.
Thank you. I think that would be certainly important to quantify and to look at not only the lost revenue, but also what's being passed on by not having that revenue there. So thank you. And thank you, Mr. Chair.
Thank you, Representative. Okay. Lightning round number 2, 3 minutes per person. We will begin with my friend and the ranking member, Representative Holly Cheeseman.
Thank you very much, Chair Scanlon, and I'll talk really quickly. First of all, with regard to what Senator Farr said, I would be interested in having further conversations about creating a more vibrant economy, particularly with regard to tax policy for businesses in particular, the role of tax credits and that sort of thing. 47,000 new businesses were created in Connecticut last year, and I like to think that some of them may grow into major economic engines. And I would be very concerned if we were putting into place tax policy that would stifle or inhibit their growth. With regard to Representative Paletta's question and Senator Farner's comments, I think Representative Paletta was referring to a total tax burden. People don't just pay Connecticut income tax and property tax and sales tax. They're also paying taxes at a federal level on income, on capital gains. Question, and this may be apocryphal, I was under the impression that DRS actually had a unit that tracked the wealthiest Connecticut residents with a view toward analyzing the impact should they opt to leave the state. Is this apocryphal, or does DRS have such a unit?
No, that wouldn't be legal. We couldn't do that.
But you have a good idea.
Only thing we have is anecdotal. You know, we notice it when the revenue drops.
Right.
That's the best thing I can do.
Right. And so if 10% of those top decile left, of those 775, 70 moved out, what would be the impact on the revenue we collected?
We'll let John take a stab at that, but I have an idea. John, what do you think?
Oh, it would be purely a guess. Representative, can you repeat the question again? It was a little difficult to hear you.
Sure. So in your top decile,
Yep.
if 10%, 77 of those individuals left, could you say what the impact on the revenue collected might be for the state of Connecticut?
It would be substantial. I think I'll leave it at that. It would be substantial.
And I believe Senator Cabrera touched on this before, with the ability of people to work remotely from anywhere in the country. Is this something that keeps you awake at night? Were we to institute tax policy that says, okay, it makes more sense for me to live here, I can still run my business?
30 seconds.
I know it keeps me awake at night, but I also think there's some opportunity here for us to create a system where people won't necessarily be motivated to leave. I think if we do things right, we can hold on to some of those folks.
Okay, and this is obviously for further discussion. I know we put into place taxation deals with neighboring states with regard to remote workers. Is this something we're going to be revisiting?
I have asked in our legislative request that is something that we would have a discussion about this year through a task force to develop and promulgate a policy to be adopted next session that looks at all different options in terms of that problem and the loss or gain of revenue.
All right, thank you. Thank you very much. Thank you, Chair Scanlon.
Representative Farrar, followed by Senator Fazio.
Thanks, Chairman. I will go very quickly. Just kind of following up on a few colleagues' questions earlier, specific to what could be our tax gap. Is that an analysis that the department has done at all? I know at the federal level, it estimates that there's a $600 billion tax gap, which is on unpaid taxes. And is there analysis or range that you all could estimate for our state?
We generally work with the, this opened a little bit of debate, but generally we believe around 40 to 45% of the people out there, individual tax filers, don't pay their full liability or any liability.
And so from a monetary standpoint, if that 40% applies to our income tax, that is expected, how much money are we speaking about, Commissioner?
I think we did a study on this, John, didn't we? What was the number on that?
Commissioner, we did a study, and Representative, it was strictly on sales tax, and it was several years ago. I want to say it was maybe 8-9 years ago, maybe around that time frame. And it's just really looked at sales tax because, as Commissioner mentioned earlier, sales tax, it's a difficult tax when it comes to the collection side of things. We spoke today a little bit about the complexity of the tax and how it's evolved over the years. And at that time, our analysis, and again, I probably shouldn't do this because I'm going off the top of my head and it was done a while ago. I think it was somewhere in the range of $200 million is what we estimated the tax gap to be for sales tax. That's a guess. Again, I can certainly go back to that report and get you the hard numbers from that report. And we haven't done any type of an analysis on personal income tax. I know, the federal government has published several studies on the tax gap, and they put the number extremely high. It's in the $300 billion range, I believe, when it comes to the federal tax gap. And we're a percentage of that. Connecticut is certainly a percentage of that. But I can get you the sales tax numbers if you'd like.
That would be helpful. I do hope, given what we talked about earlier, separate from the tax incidence, that the DRS would support your ability to do an analysis on the tax gap. Hopeful that it would support some of what you spoke to earlier, Deputy Commissioner, of this, just the investment in staff that could, again, kind of narrow this tax gap so that everyone who owes, we're all kind of paying, again, kind of fairly into the system. So I hope that you'd support that type of analysis moving forward.
Absolutely.
Thank you. Thank you, Chairman.
All right, Senator Fazio, bring us home.
All right, just a few more quick questions. Thank you again for your indulgence in your report. I forget and apologize if I missed it, whether we went over this at the beginning, but do these progressivity statistics only consider market income, or do they also consider in-kind government transfer income and cash transfer income?
They don't consider government income, cash transfer income.
So, for instance, if the lower deciles have a large degree of transfer income from the government, that would and that were factored into the denominator of income, that would make the tax system in Connecticut look less regressive or more progressive.
You're right. It depends on the program that we're talking about, whether they pay taxes on it, whether it was taxable income or not. But yeah.
Yeah. Okay. And again, do you have literature on the relative progressivity of the other states, or you're just interested in finding it?
No, I don't. We haven't. I haven't looked lately at progressivity of other states or what they're doing or moving that way or not. But it's something in an area that is fertile, I think, particularly for the next study too. We should consider what's happening, at least in the region, so that we can understand as people have asked today, understand our economic competitiveness as well in this discussion.
I did see one study from the Institute on Taxation and Economic Policy. It was pretty thick, but it said that Connecticut was a little bit more progressive than the average state. So that was the one that I did find that was comprehensive. My last quick lightning round of questions is based on kind of what you know. Do you think that the 2019 budget and the tax changes in it, which were mostly sales tax increases, do you think that made our tax structure in Connecticut more or less progressive?
Well, I mean, I think from a strictly academic discussion, you could argue that they were stabs at making things more progressive. On the other side, flip side of that is, you have to start with what your base tax is, and if you believe that we don't tax enough, then and we needed the revenue, then that's what we should have done. Look, I said it earlier, I'll say it again. I think the best incidence is lower taxes or no taxes. That's just me, but at the end of the day, we know that we have to fund critical services that this state and our communities offer for our residents. So that's the tug and pull of governing. And I think at the end of the day, the policy decisions made by the legislature were those to support the delivery of those services.
But from a tax standpoint, you would, if it relied on hundreds of millions of dollars of sales tax increases, right? You would have to say that it made the tax system in Connecticut more regressive.
Depends on the sales tax that we're talking about, right? So if there was a gift tax that went up, or excuse me, the luxury tax that went up higher, you could argue that it's more progressive. If it's just a straight raise, let's raise, sales tax across the board, then it would be considered regressive.
All right, thanks again for your time.
Well, Seeing no further hands, Commissioner, I want to thank you for your endurance here for the last 2 and 15 minutes here. Obviously, I think the interest in this shows the interest that we will have working with you going forward to ensure that A, we can make some changes to the format, and B, that we can continue having conversations and using this data to analyze and inform the policy decisions that I believe we have pretty much bipartisan agreement that we need to work on going forward, given the contents of this report. So I know you're down to work with us on that and appreciate that, and your entire team's willingness to be engaged with us on this. And I want to thank you again for the report. And we will hopefully begin this conversation anew in 2 more years. Thank you. Thanks, everybody.
Thank you.